Talking point this morning, we have a very special guest, Neelkanth Mishra, Chief Economist at Axis Bank and Head Global Research at Axis Capital. Neelkanth, very good morning to you. And I think it's been a struggle this morning for most people because they were up till midnight watching that spectacular, watching history being made. So let's be honest, that's what's top of mind right now. So even as we will ask you about markets, economy, and all of that we always do, just your favorite moment and what you have to say about this moment.
No, I think it was very exciting, and what was even more exciting for me was how the team was so confident. They were smiling even at stress moments. They were so professional. In fact, this run out that was executed. In fact, I think I totally agree with Nasser Hussain's comment that it was Jemima's save in the previous ball which put the stress on the batter, and then she took a run, which was then I think it was Amanjot who actually made the run out. So it was I think all round great performance. I wish they had made 25 more runs, but anyway, finally we won. So it was really exciting.
Yeah, well, Neelkanth, imagine if we had scored 25 more, then the extent of the defeat or the extent of the victory for us would have been quite stunning too. But not that this was bad. But Neelkanth, I know this is not a cricket conversation, it's about markets, but just, one thing that all of us who are investors, who are looking at economy, etc., learn from this sport or any sport, right? What was that for you, both from the semi-final and the final? Because if semi-finals was won by the batsmen or the batswomen, and the final was won by the fielders and the bowlers, right?
Yeah, so I think the biggest takeaway, I would say, from or a general takeaway, I mean, not sport related, is that one, it takes time. I think a slow build up. They've come close in the past, and finally they crossed the hurdle. But even more important, all the backstories of girls playing from very young age. Some of the family members, in fact, if you have read some of the newspaper reports. One of the brothers of the girls actually came in a van or a truck with 18 other people from their village. So stories of aspiration, hard work, and a lot of this happening away from the limelight, meaning that we're all celebrating it today. But think about all the work that happened in the background, away from the limelight, and that is driving it. And I think the parallel for India, and in fact, over the weekend, I met an investor who asked me, what are the things that people don't realize about India? And I think the biggest picture is all the stuff that you don't see. And, we remain obsessed with, the headlines, what's happening in Delhi. So many big changes happening at the state level. You look at the way the economy has started to create significant amounts of risk capital. This is all happening, through 11 crore folios, putting in 2,600 rupees a month, $30 a month. And that's creating a whole new ecosystem, significant amount of capital being generated. So there's lots for us to so sport in many ways is also representative of the larger society. Look at the confidence with which these girls are playing. Look at the crowds in the stadiums, and look at how all of us are so excited. And I think if you're talking about gender equality, think about my daughter who's so excited about this victory and how it changes her thinking and therefore, I mean, from a very, very narrow objective of improving female labor force participation, I think this does a phenomenal job, and it also represents how India is changing.
I don't think it's narrow at all, Neelkanth. It's a very important point. I mean, if 50% of your population feels more empowered, and these women have done a huge service in doing that. I mean, only the Neelkanth Mishra can draw an analogy between this historic cricket match and the markets and the economy and labor force participation, just fantastic.
But can I just one final 10 seconds here? I mean, just such a beautiful point, but just on that cricket beat, in some sense, I wonder if this is what Mahendra Singh Dhoni's advent into the cricket scene did for rural India, boys to come into cricket.
And now, not so rural, but yeah, okay.
But back then, right, 2007, and now what the women's cricket team will do for women cricket and women's sports in India.
Yeah. No, I think the wrestlers have done that also in the past, but definitely. So, okay, as obsessed as we are about the match this morning, Neelkanth, I think our viewers will not be happy if we don't ask you about what you think is happening in the markets as well. So let's get down to a bit of business too. Safe to say that corporate results has been the silver lining so far, maybe for most part of this calendar year.
Yeah. So, but see, a lot of what we see is still in the rear view mirror. So, the big changes that have started to happen, and this is an aspect we've discussed in the past, but I think it's important to reiterate that FY25, the growth rate was 6.5% year on year in real terms for the economy, despite 130 basis points of fiscal consolidation and the monetary tightening, which I think took away more than 2% of GDP growth. And as the monetary easing is now starting to take hold, and we are starting to see credit growth recover maybe 2 months earlier than I had expected, of course, helped by what's happened with the GST. And the fact that the hard miles on GST and on the fiscal consolidation have been crossed, the underlying momentum of the economy is starting to emerge. And we have not yet seen it fully in the results. In fact, we are still seeing cuts because the misses for some of the companies in the September quarter have been quite meaningful. But again, this is still the rear view mirror. And some of the like the excitement around the auto numbers that came out and the upside risk that is now emerging in, say, autos, will over time, I think, manifest itself into a very classic supply chain bullwhip. So, so if any sector goes through a step jump in growth, so you have something going from 1 to 3% growth to say 8 to 10% growth, the upstream ecosystem, at least for 3 to 6 months, will see significant acceleration. And it could actually mean that steel demand, for example, does way better than what trend growth is going to be in the next 6 months. And so all of this will give significant support to the earnings forecasts, and the roll forward gains that we had been used to in the 2022 to 24 period, I think will start showing up again. And that's actually very supportive of the market as a whole. And what this can also do is that India was among the worst, not among the worst, it was the worst among the major markets in terms of earnings momentum, earnings change momentum. That we saw CY25 earnings fall by almost 12% from the peak to where we were a month back. This pushed away many investors. This also supported, that is, foreign investors, and this also supported this somewhat premature assessment that India is an AI loser, and that Taiwan and Korea and some other countries in China are AI winners, and therefore we should stay away from India. And so the relentless FII selling that we have seen has been not just because EMs and Asia as an asset class have lost assets, but also because India was seen as being on the receiving end of the AI shift. I think the investors may have forgotten that there has been a very strong business cycle at play, and as that starts to recover, we may actually see foreign investors coming back as well. So all in all, I expect that the next 3 to 6 months should be far better than what the last 3 to 6 months were.
Such an important point. Just dwell on it a bit. Is the thesis, am I understanding this correctly, that you believe that this whole AI loser or losing out on AI plays conversation comes off because AI becomes a commodity and foreign investors stop seeing that as a vulnerability over the course of the next 3 to 6 months? And is that what drives flows? Or is it that coupled with earnings, coupled with macro stability, et cetera, et cetera?
Yeah, see, the macro stability point, I think most people now
accept. Okay, fine.
The fact that inflation is far more stable than it used to be and all of that, right? So, but I think the investors seem to have forgotten that the business cycle has a much more important role to play in an economy like India, and which is where domestic demand is far more important. So that story, I think, went to the background because even at the best of times, and I've been seeing this for the last 25 years, that no one can differentiate between what is seasonal, what is cyclical, and what is structural. So the fear is when there is a slowdown, you don't see it as a cyclical thing because of the monetary tightening, inadvertent monetary tightening that happened last year, the intentional but quite extreme fiscal tightening that happened last year, and that the business cycle has a much more important role to play for earnings than anything to do with AI loser or winner. The AI side, this is not to say that AI will not be impactful. So I think it will transform many industries. All we are saying is that it is premature for us to say that India as an economy will suffer significantly because of AI. Because, at the forefront of that sector or of that impact should be and is the IT services sector, because that's where a lot of programming happens. There are people who are fearful that there will be a significant decline. But look at the tech companies starting to hire freshers again. The fact that some of the Indian IT services company maybe listed abroad have actually started beating numbers. Of course, beaten down numbers, meaning that the estimates have been reduced significantly, but they are starting to surprise on the upside. So, we should not conflate what is actually a business cycle, or even for IT services, there was a period of overhiring, over-ordering, and then a period of consolidation. And now, as the US-China detente sort of lasts for, say, about a year, and the business cycle in the US, I mean, at least there's some visibility that comes in. It is quite possible that the downgrades in IT also start to moderate a bit. So I think it was premature. This is classic, market psychology, herd mentality, that the open AIs and all the AI.
Just, even as we speak about the AI factor of the world and trade deal, et cetera, I think one very core story which we need to see is what's happening with the banking results and the whole BFSI space. That's, core and the backbone for us as an economy.
Yes.
That has been a bit of a turnaround, green shoots, or am I being overtly optimistic?
No, but that is to be expected, right? Because last year, the intent of the regulator, and remember that the RBI is the final arbiter of money, final controller of what happens to credit growth. And last year, even though the feedback was being given that, look, the slowdown in credit is far more broad-based than is required, the first instinct of most of the regulators, was that, but we want credit growth to slow. Today, you have the Monetary Policy Committee saying that growth is fine, but it is below aspirations. How can we boost credit growth? The moment they get feedback that, look, it is not just monetary tightening, but it's actually regulatory tightness, which is slowing down credit expansion, you see significant easing on regulation. So the last MPC, I think the standout disclosure on the same day was that banking system regulations were eased. So if the policymakers want credit growth to pick up, they'll make sure that it happens. And therefore, I think the improvement in credit growth several months ahead of what was expected is actually a very welcome surprise. And given how much of capital is going in, you've seen private equity, you've seen foreign MNC banks putting in significant amounts of equity into this ecosystem.
Sure.
The fact that this is the first upcycle where PSU bank balance sheets are not impaired.
That,
I think,
it's just the perfect spot or the perfect place to conclude our conversation. Neelkanth, thank you so much for joining in today and sharing your thoughts, not just on the markets, but what women's sports means for India and the economy.